Welcome to the Millionaire Mentorship Podcast. We discuss real estate investing, entrepreneurship, and business to help you retire and become financially free. Make sure you share this podcast with someone who could benefit from it and leave us a 5-star review. It truly helps me out. This show will mentor you towards financial freedom. If I can do it, so can you.
What's up, everybody? I'm here with Mikey Taylor. I'm super excited to talk to Mikey today. He knows everything about apartment buildings, everything about storage, or at least enough to do a ton of them. And I'm excited to pick his brain. He's a builder, he's a developer, and he's an investor. And welcome to the show.
Thanks for having me. I appreciate that.
Appreciate that. So you're in California, right?
California, Southern California, a little city called Thousand Oaks.
Nice. I remember Thousand Oaks. I bought some Neil Diamond tickets like off eBay, 20 years ago. And the guy was from Thousand Oaks, California, who sold them to me. It's like the first time I ever heard of that place. Yeah.
Thousand Oaks is it's a little bubble almost. Like, it doesn't feel like really any other cities inside of California. It's close to LA, but it doesn't really follow the characteristics of LA. It's, we're in always the top 5 safest cities in America. It's quiet. It's a little bit slower pace. It's cool, man. It's perfect for raising kids.
Are you from there? Are you from Cali?
Born and raised, yeah.
That's awesome, man. And California, just to let you know, I love California. I just wish it wasn't the way it is right now. But
we all share that same concern with you. We wish it wasn't the way it is also.
Yeah. Yeah, it's sad because I remember as a kid, I think everybody dreamed of moving to California, myself included. We all dreamed of those Beach Boys songs. I wish they could, be California girls and then just moving there. But you're living there. You're making the best out of it. You're living in an awesome little area called Thousand Oaks. Tell us about how you got your start, where you're currently at, and what you're up to.
Okay, so high level, and this story is going to sound a little bit wild because it is all over the place. I got my start actually by learning how to skateboard. Picked up a skateboard when I was young, became a pro skateboarder. Traveled the world for about a decade. I was kind of top 10. I did pretty well with it. And then from the skateboard industry, I went into the beer industry. I started my first business called Saint Archer. We were a production brewery down in San Diego. And we had a lot of success with that company. We ended up selling it to MillerCoors in 2015.
Nice.
And then from there, I started my current business, which is Commune Capital. We're technically a private equity real estate firm. Basically what that means, we bring investors together that want to invest in either storage units or multifamily apartments, but don't want to do any of the work. And that's where we come in. And then on top of that, my, side hustle or give back, well, however you want to, see it as, I'm a council member for the city of Thousand Oaks. So I'm involved locally in Thousand Oaks on that side as well. I'm
so glad you brought that up. I totally remember that now when I was doing my research.
Yeah.
You're a saint as well as that's a tough gig, man, because you got to go from being this person online who's got a lot of opinions to now you got to kind of be a politician a little bit, right?
Yeah, it's the answer is yes. And some of this I've had to learn along the way. Prior to this, I would never think about impact of what I was saying in social media other than, is this correct or is this not correct? Right? That was kind of always my gauge. I never thought about, potential blowback. Now, I just have to consider things. Like, if I'm going to say something about, even the tax code, even though that has nothing to do with city council, there's always opposition against you. And, there's the opportunity to take anything you have said and kind of use it in a way to, paint a certain audience against you so that people don't vote for you, right? We all know that strategy. And so, there's more calculation at times that might go into the posting process, but I try my best not to let that get in the way of putting out good quality content. And I try to still hold that original barrier. Is this correct or is this not?
Yeah, I think that's a good barometer in general, but it's so I think social media is the best reflection of what politics is, because you get instant response to the words that you say, and you might not even realize the words that you say. Somebody could be I remember the first time I said the word cheap, Mikey, and everybody was like, you're a slum, you're a this, you're a that. And I was like, all I said was we're cheap, you know?
Yeah.
And it's just crazy how many people could draw conclusions. I'd love to get into a couple things. First of all, I'd love to talk about your skateboarding. Like, I grew up with guys like Tony Hawk. You seem a little bit younger than me. So tell me about that journey.
Oh, like what was it like? How it got moving? What do you want to hear?
Well, yeah, like how did you develop the passion would be my first question. And then how did you decide that I'm done with this now and move on to the next thing? Because I know a lot of people, especially my friends who are pro athletes, which I consider if you're that top 10 in the nation, that you were definitely a pro athlete, right? Yeah. And so it's like knowing when to not give up, but maybe put aside my dream and then move on to this other thing. So my first question is like, how did you develop it as a passion? How did you feed that passion? Because I know you're a parent as well, but I've got kids and I'm like the push and the pull thing, right? To try to get them to feed. Your parents did something right to get you to like really feed that habit. And I'm curious to what that was.
Yeah. So basically how it started for me, and a lot of this is actually paired with my personality. My personality, I like goal setting. When I get into something, I get obsessed with it. I'm kind of a like nuke or nothing type of person. And so, I fell into skateboarding very naturally. I saw some kids that I thought were cool riding a skateboard and just wanted to get one to fit in. I was probably around the age of 12. When I started doing it, it very quickly became an obsession. And because I'm goal oriented, this was kind of the magic that came along with it. Skateboarding is impossible to master. You can't do it. Like no one can. And because of that, the goal was never accomplished on my end. So I was constantly chasing it. And that's what I need to stay engaged. Typically for me, once I hit a certain peak, everything becomes really boring and then I'm not interested. So I really enjoy the challenge. And so that kind of kept me obsessed. The next component was right around 16, my parents wanted me to get a job. They didn't want me just skateboarding, all day, every day. And so me being 16 didn't want to, work and I didn't want to not skateboard. And so I came up with like an alternative path, which was I tried to get companies to give me free product because I was good at skateboarding so that the local kids would want to buy their product because I was wearing it. And then in turn, I thought that I might have extra, free goods that I could then sell to the skate kids.
I liked what
and
you're
so
thinking.
I made a video of myself. I sent it out to all these companies. I ended up getting 3 to jump on board and officially sponsor me. And then that lasted about 2 years of me having like a little side hustle of selling my extra skateboards and shoes. And then at 18, when I graduated high school, one of the sponsors was starting to put me in magazines and there was this big European tour that was coming up. And I kind of felt like I had the opportunity to kind of take it to the next step. And so I told my parents that I wanted to basically put college on hold and continue skateboarding. Right. Their pushback was kind of twofold. One, I wasn't making any money. So why was I going to go skateboard, not go to college to not make money, at least from like a consistent monthly income standpoint.
Right.
And then 2, they were very scared of me not going to college. Like they thought that if I didn't go to college, I couldn't really make money. And so I was kind of closing the door of some potential of what my future could become. Right. And so I basically called the sponsors that wanted me to go on the tour. And I said, look, I think I have an opportunity to do this with you. I think I could be a great pro skateboarder, but I can't not go to college if I'm not making money. You're going to have to pay me. And so I used that as leverage. They started paying me like $800 a month. So it wasn't much. And then I told my parents that I was going to try being a pro skateboarder for a few years. And that if it didn't work, I could always go back to school. And so within that 3 years, my career just exploded. I had my own name on a skateboard. I had my own shoe. I had my own clothing line. Wow. I was making pretty good money. And then that bought me a little bit more time. And that ended up going a little bit over 10 years.
That is amazing. That's so cool that you were able to do that at such a young age. It makes me think of like some of the things that I learned back in the day about, I mailed companies as well and asked for free stuff. So when you're saying that, and my kids came home the other day and they were like, hey, I want to mail companies and ask for free stuff. I'm like, well, you just can't say, give me stuff. You got to like write a story, right? You got to like tell like, hey, I'm Mikey, I'm this pro skateboarder. And so how did you think to do that? Like, did that come from a movie? Because it came from a movie for me.
No, for me, there was a couple kids in my town that were super good that were sponsored.
Yeah.
But how they got sponsored, it was like someone at the shop discovered them, or it was like somebody that noticed them. So I think I saw them being sponsored and thought it could be possible. I just had to find a way to get the companies to know who I was, as opposed to hoping that somebody randomly discovered me. And so I made the video. I basically, went through a handful of skateboard magazines, and every once in a while, when a company would put an ad in the magazine, they'd include their address at the bottom. This is way before social media. There's no DMs at this point. Yeah. And so anyone who had an address on their ad got a videotape from me. I sent 40 out the first run.
I love that. Determined.
Yeah. I'm telling you, the obsession has been very valuable for me.
Yeah, it's a double-edged sword. I tell people that I'm very obsessive too. It can be a double-edged sword, right? Like you can obsess about the wrong things, and you can obsess about the right things. So learning how to really cultivate that is a big deal. So it sounds like you've been able to do that correctly. So how did you turn? So you obviously did great on the skateboarding. You were able to pay your way. Did you ever end up going back to college?
No. I started my first business, was really successful, and never needed it after that.
I wish I would have met you when I was going through college, because I thought that was the biggest waste of freaking time that I ever did. Yeah. So going into the private equity thing, it's funny that you mentioned that. Like that's something that you're big into right now, is because so many people don't understand that like growing as a real estate investor, you're going to run out of money. Right. And you might not run out of your skill set, like being able to build awesome storages, be able to do all these things, but you're going to run out of money. You just are. And so the ability to raise private capital, private equity is such I would say an untalked about thing in the real estate world, and an unspoken thing about how most of these major projects get done are through syndications, are through private equities. And nobody ever talks about them. Right. People don't understand what an LP is. They don't understand what limited partnerships is, or syndication. And it's just this big convoluted thing. So how did you get started with storage, apartment buildings, and then how did you transition that into private equity?
Okay, so I started by actually investing passively. When I was skateboarding, I kind of had this model set that I was going to live off a fraction of what I was making, and I was going to invest as much as I possibly could. I was, in certain investments, it was every other week. In real estate, it's hard to be that frequent because opportunity doesn't always present itself. But anytime a storage project came up, I wanted to invest into it. I started investing in debt funds as well. So I got my first opportunity on the passive side.
Copy.
Where I started learning how to raise money was with the brewery. Myself and my partners didn't have enough money to start the company ourselves. And so we created a business plan. We brought it out to investors, which were friends and family. We had no connections. And we raised money for the first round. And then, we did really well, and we had, we needed to grow and scale. So we had a few rounds after that. And then when we sold it, we paid a huge return to our investors. And it was kind of one of those moments for me, like it wasn't like a light bulb moment. It was like the whole entire world opened up for me. And it was because I realized that my ideas were no longer bound by the capital I had in my pocket. It changed kind of what opportunity meant for me. And remember, I was a skateboarder that barely graduated high school with no college degree. And myself and my partners who were in the same profile raised, $8 million and were able to 12x everybody's investment in 3.5 years, right? Like this wasn't because I was, overly educated to achieve this. And so after the sale of that, I spent some time trying to figure out what I wanted to do next. Like me being goal-oriented and obsessive, the good thing is when I'm into it, I'm going to get it. Yeah. The bad news is I can't turn it on and off at will. Like I have to have something that is probably more purpose-driven, and then that action comes behind it. And so I was trying to figure out what to do. And I decided I wanted to create a company that offered an investment for my friends and family, which, the brewery did. And then I wanted there to be an educational component to it because I was so lucky to have somebody help teach me about credit and budgets and asset allocation and investing. I mean, it changed kind of my trajectory of my future. And so I landed on a private equity real estate firm. And I figured, okay, I've been investing in real estate. I know how real estate works. It is much more simple than what I did with Saint Archer. That was the brewery. Yeah. And I know how to raise money. So let's do this now. So that's how I started it. I learned that fund management is an element of, there's a complexity to fund management that was very different than the brewery. So it took some time for me to learn that side of it. But
what part was that?
Okay, good question. So basically in fund management, there is a lot of regulation, a ton of regulation. And in the world of, like, let's say SEC for me, if the SEC comes in and they want to just go through an audit and they start seeing all the things that we're doing wrong, we cannot look at them and say, oh, we didn't know. That is not an option. They do not care if you don't know. So what you have to put in place to make sure that you are following all the regulation it's pretty intense. There's a lot of things you can and can't say. There's certain, financial reporting that we have to stick to. It was a different thing than just raising a friends and family round with the last business. So that side of it was more complex for sure. You're dealing with bigger dollars, right? Like our last company, I raised $8 million. Gosh, I feel like we'll raise $8 million within, 4 weeks now. So it's just a different kind of type of business.
And when you're talking about that, you're referring to like the difference between 506As, 506Bs, and then you're talking about like doing a private placement memorandum for in order to comply with the SEC and whatnot.
Correct. So we structure the majority of our stuff as 506C offerings. So it gives us the ability to market. That means it's coming with a PPM. You have your operating agreement. And so it's a lot of, like having good legal counsel is very important. I have a chief compliance officer. So I have to have a, C-suite level officer just to manage our compliance. We never had to worry about that with the last company.
Yeah. Now, let's talk about storage. Let's go right into there, because I think that one of the things that's so crazy for me to even think about this, but like storage seemed like you missed it 20 years ago if you didn't get going in it. Like I remember like when these storage places were first starting to get going, and that was like, I don't know, 30 years ago even maybe. And people were like, the public storage and this and that. And then a friend of mine got involved, actually a business partner of mine got involved in 2016. So I was able to see it firsthand with his first storage. It was a conversion that he took into it. And then I watched him do an exit on it, right? A zero money down type of deal where he raised all the capital. It was a small syndication, just one or two GPs and him being a GP.
Right.
And I was like, man, that is way easier than, apartments and this and that and the other thing. And then, just listening to like, the mattresses don't complain and that whole thing. And it just really, I think storage is it's got very similar characteristics as multifamily without all of the headaches that come with broken pipes and human beings and all of these other things. Can you talk about like what your holdings are right now, kind of what you guys like? Do you guys go ground up? Do you guys look for existing models, or how do you decide what you guys actually invest in?
Yeah. So the two asset classes that we primarily focus on are storage and multifamily. I might be a little off with these numbers, but I believe it's about 165 million of storage and about 130 million of multifamily currently.
Wow.
On the storage side, we do something similar to what it sounds like your friend did. We do adaptive reuse. So we look for big box retail that goes vacant, like a Walmart or a Kmart. We leave the existing structure and we fill the inside with storage. That's kind of been our model. We also have 2 stabilized ground up developments that we did. And then we just closed on a property yesterday that will be a scrape and build. So this will be a development of about a little over 800 units on this one.
Wow.
Look, what would it have been like for you to get into storage, in the early 2000s? Yeah, it was amazing back then. It really was, right? Yeah. Does that mean that the opportunity is gone? No, there's still opportunity. It's just different now, right? The comparison on multifamily and storage, it is a different type of asset in the sense of tenants, right? When you're building apartments, you're building a place for somebody to live. You're building a home for somebody. And that is a different type of management than, let's call it what it is, a garage for somebody to put their stuff in, right? But I think the thing that you just need to be mindful of is when things are easy, typically more people do it. And when more people do it, usually that becomes saturated and harder to find opportunity. I would say right now, that probably makes sense. Storage in a lot of markets, and probably as an overall, it's kind of saturated right now. Yeah. You've seen cap rates soften. Multifamily on the other end is going through, an undersupplied moment. There's a housing crisis in a lot of cities, and a lot of cities are putting all of their general plan or planning for their general plan into housing. And so I would say what I want to just clarify, don't not move into opportunity because it seems harder. A lot of times the higher barrier to entry actually keeps out competition for you and can put you in a scenario where you can actually make more money if the barrier to entry is harder. It's just counterintuitive to what we think.
I totally agree with you on every single thing you said right there, especially the barrier to entry with anything. It could go for even a lead. The harder a lead is to track down, the more likely people stopped right where you are going to start and continue. And then when you said, I could see your political sign when you're talking about the general plan now. For those people who don't know, most cities are running off of a master plan and a general plan. So probably that gives you an edge now, the fact that you understand how cities work, right?
Yeah, I would say, somebody asked me this yesterday, like, has city council, they naturally thought that city council would hurt my business, right? That's what you actually see. Unfortunately, a lot of people that get into local politics, it actually does negatively impact their business. Typically because when you're getting involved locally, you usually have a local business or a small business. Right. And even though city council is not meant to be, play the political sides, you don't run as a Republican or a Democrat because you're figuring out real estate, budgets, cracks in sidewalk, right? Yeah. But in a lot of areas, it does become political. And so what you see for the local businesses is you have a customer base that gets split. So I would say that's the unfortunate part. For me, we don't really have a local business. Our real estate holdings are, we have projects nationally. Right. We have a lot of investors that come in through social media. My social media is not bound to the local area. But what I told him is I actually think there's been a positive impact to my business because now that I'm a part of the city, you start learning and seeing how the city thinks and how they plan and how they communicate. And it's like anything. Anytime you're having a conversation with somebody, when you get to know them, you then understand how they got to their conclusion, and you usually have a better relationship or you're able to solve problems better, right? It's when we go in not willing to learn what the other side does and hold hard on our position, that's when kind of things become more challenging. And so now, the way I communicate to cities we're working with, the way I look on how we can fit into their plan, that's changed big time. Yeah,
that's so important too, is just being able to speak the same language, right? Yeah. Like that a lot of times is we may be saying the same exact thing, but we're speaking two different dialects or two different languages. And in order to be able to, one of my mentors that I look up to is a guy named Stephen Ross, owner of the Miami Dolphins, one of the largest affordable housing providers in the entire world, owns 224,000 units. And he always says, if you're in the business with the city, you're in good business because they have needs. And if you can be the one that they can rely on, that they can count on, that they can trust, and you have to speak their language, then chances are you're going to be able to get some stuff done that other people are not able to do just because you speak their same language. So That's important. Right. Yeah, so important there. So talk to me a little bit about, the raising of capital on social media. I think, Grant Cardone is kind of the OG, so to speak, in terms of really popularizing raising capital through social media. And since him really, I think, being the guy, whether you agree with him or not, I know a lot of people do, a lot of people don't, but I think he kind of was the first guy to trailblaze, taking multifamilies and doing all these other things. How do people find you? How do they get interested in what you're doing? And how have you been able to raise capital online? Are you doing like VSLs? Are you doing like, hey, we're going to educate you? Because the syndication space, as you know, traditionally, or private equity, usually is an insider's club, right? Now when you're going to social media, that is everybody, right?
So it's been an evolution. I guess we could say that. So when we started the brewery, like again, I was getting ready to finish skateboarding, didn't really have like a business network. And so the majority of our investors were friends and family. So we had to do it the old school way.
Yeah.
When we sold the brewery and we were coming off a large exit, I at least had a base of investors that looked at myself and looked at my other partners and went, what are you guys going to do next? And so I had a pretty good source of capital when starting the next thing. And then I spent probably the next 3 years raising money the conventional way, right? Going to events, just building my name recognition, in the real world, not online, coffees, dinners, stuff like that. And I remember thinking to myself, like, this is not the best way to do this. This is slow and inefficient for where the times are. Yeah. And I remember just going, I got to figure out how to raise money online. And so 2019 is when I went, we got to figure this out. I think 2020 is when we had like our first digital investor, and he didn't even come in for the minimum investment. And I didn't care. I was like, I don't care. I'll waive the minimum for you. I just need to see proof of concept that we got one. Right. And so he came in, and then we started putting more energy towards raising capital online for 21 and 22. 22 was probably the year where it started changing. That was a year where I think the majority of our capital for a handful of projects came online and not from like my network. And then 23 is when we started investing in like a full digital kind of capital raise strategy. And then now I would say 85% of our capital comes online. So we are now raising a lot of money online versus how we started this firm. Now, what do we do to do it? A handful of things. I would say we start with content, and our content is meant to be more educational. So we want anyone who's following us, whether you're accredited or not accredited, you're sophisticated or just getting started, we want to have content that fits what you're looking for, right? Empowerment. And so that's how it begins. And then we have a podcast that we do. We have a handful of series that, people can follow along with. And that's meant to just be a trust build and to kind of get involved in our community. And then we have basically opportunities throughout the year where people can get information to see if what we invest in can fit. And so, the lead list has grown a lot. The dollars have grown a lot, but it takes a long time to get it to a point where you are building trust digitally to the point where people trust you in giving you their money.
Well, I think you just broke it down. It took you 5 years to really start to do that at a scale. And so for people who just think it's like, and I can echo that because I've had a fund funnel out there for a while just to test it. And you could be online for 3 years and you might not have anybody that's ever going to raise their hand and be like, yeah, I want to invest with you. Yep. But at the same point in time, if you don't put anything out there and say that, you're not going to ever have anybody. One thing that I'm working on, Mike, and I would love to have your opinion since you have had a lot more success raising private capital than me, and I'd like to offer you something that I think might help out your business is one thing that I'm pivoting towards because I felt like you just talked about minimum investment. And that is one thing that I've struggled with is like, I don't want to go deal with, 80 people with $25,000 or 80 people with $50,000. And so I looked at, as you follow projects, you follow clues, right? Life leaves clues, success leaves clues. I noticed that a lot of these projects, these bigger projects, were getting funded with immigration money. I don't know if you're familiar with the EB-5 visa program, but the EB-5 visa program allows people, and I found this out actually from a California attorney, it allows people that want to immigrate to the United States legally to basically buy their way in by investing in real estate. And the minimum is $850,000 for them to invest. And it's anywhere from $850,000 to $1.2 million is the minimum investment. And the reason I say that is I just feel like that would be very beneficial to you, especially when you're in California, which is like one of the top places for people to be immigrating in. And like I said, the only reason I found this out is like, I'm sitting around there and I'm watching this deal, and there's this deal in Kansas City where I am out, and I just spent the last 15 years in Vegas. So I moved here 3 years ago during COVID, and I'm watching this project, Mikey, and I'm like, how is this, you know how you kind of wonder sometimes, like, how is this guy hanging on? Like, how is this guy not gone under yet when this project has been sitting here for 10 years? And I'm like, and then people tell me, well, that project was funded with EB-5 money. And I'm like, well, what the hell is that? They're like, well, do you remember Jared Kushner? I'm like, yeah, I remember the Jared Kushner. And he's like, well, he's the guy who funded, like Jared Kushner is the guy who funded all of his projects with EB-5 money in New York City. And so as I started looking at that, I'm like, man, this is the next big thing for a guy like me who wants to get into private capital, is going and trying to be that guy for the immigration attorneys, trying to be that guy for them. Because what are immigration attorneys great at? They're great at getting people to immigrate, but they're not great real estate investors. I've seen that firsthand.
Right.
And so I just want to drop that nugget to you, and hopefully
I'll look into that. I don't have any experience with that. I'm going to definitely look. I appreciate that.
Yeah, for sure. And I want to transition to that. Do you find it? What is your average size of investment that people are putting in?
I would probably say our average check size is probably around 200. I bet.
Oh, that's a good size.
Yeah, we have like how it ends up coming down. Online, everyone asks what your minimum investment is, and that's typically where they're going to invest for the first time. And then, over time, as you're building trust and you're, starting to produce a return, you start seeing heavier investments. Our minimum investment is scaling up. If you would have asked me 3 years ago, it probably would have been 100, because that's what our minimum is. But now we're at the point where we get a lot of larger check investors as well, and it just kind of swings the average up. So it's still, the majority of checks are going to be between 100 and 150. And then now we just have more that are around the 500 and then getting closer to $1 million and up.
Yeah, and it's crazy.
And then we have a lot of, we're north of 600 investors. So, when you said a lot of little investors, managing investors that's a full business in itself. So just be mindful of that.
Yeah, let's talk about that, because the thing is, I've been an LP just like you said you started, and you got to really condition that investor, like, hey, you might not see a return for 5 or 6, 7 years. Like, you're investing in this, you're leaving your money in, and that you have to be able to communicate that clearly so that somebody's not going and saying, hey, where's my money? I want my money. I want my money. It's like, you're in this with us, right? So how do you communicate that clearly with your investors?
Oh, the first thing you have to do, and this is definitely where like newer entrepreneurs or somebody that's getting into money or into raising money, the newer kind of amateur makes this mistake often. And that is they oversell, right? They're so eager to get their dream launched. And, usually there might be a time frame where you have to do it. Yeah. And you find that they will basically say anything and allow anyone in. Yeah. And so what you learn is a bad investor can ruin a good deal. And so you start, as you become better at this, telling people no, and it gives you more, you put more priority in making sure that the person that you're telling this investment to understands everything about it, and that there's going to be no surprises. Because if you do a poor job articulating what the investment is and they think it's something else, I'm telling you, that person is going to turn into a bad investor. It might not even be that they are a bad investor. They just invested into something that was not a good fit. Yeah. And so what is very important when you're out telling people about your vision is that you're doing it through the lens of, I am looking for good partners. I don't want bad partners. Almost the way you would look for you and me, we would look at like getting married. Yeah. Right. I would want the girl that I was dating to know everything about me, because when we get married, I don't want to get divorced. I want to run everything all the way out. So I want no surprises. Yeah. And so that's how we treat our investments now. When I talk to people, this is what it is. I don't want to fool you with anything. And also, if this is a good fit, I'm also looking now at you to find out if you would be a good fit for us. And so I've gotten a lot more comfortable telling investors that want to invest that they can't. It's just not a good fit. Yeah. That's not easy in the beginning when you feel like you need capital. So it still doesn't feel comfortable today, but it's very important to make sure that you're only bringing in partners that are aligned.
No is a powerful thing, and but it's hard when somebody's got cold hard cash and you need it, right? But that person is somebody who could psychologically be a menace to that investment and cause you time and aggravation and all these other things that are so much more important than that money, right? Especially when you know that they're going to end up causing a problem. You only learn that through experience, right? You don't learn that through anything but experience.
Yeah. And then you also find, I wish it wasn't the case, but this is how it goes. The ones that are going to give you the most pushback are the smallest investors.
Yeah.
The investor that's going to place $1 million from you is not going to ride you every 2 weeks to find out what's going on. But the person that invests 25,000, that's usually the profile. Yeah. And so even when you're dropping the minimum investment, if you decide to do so, you need to be mindful of that if you're bringing the minimum investment down for somebody, is this really an investment that person should be making? Or is it going to be too much of a stretch and they've invested too much with you, and because of that, they're going to be very concerned about the projects at a point where they don't really need to be. And then that means you're spending more time walking them off the ledge every other week, and you're not putting your energy towards making sure you have an investment that's going to perform for the rest of your investors. So it's really good to make sure that you bring on the right investors.
I totally agree with that. And I think that something to echo on that is that, like, the number one fear of a new investor is losing money. Like, their number one fear is, well, I would say number two is, one is losing money, and two is the guy who's ripping me off is going to steal my money, right? Like, they, like, whatever we're talking about, like selling a coaching program to someone, I say, I already know what you're thinking. Number one, you're worried about me ripping you off. And number two, you're worried about losing money. Like, those are the number one, two fears. I had a kind of a follow-up question, because you are probably, I've talked to a lot of people who raise private capital, but I've never talked to somebody who has as many investors as you. And I've talked to a lot of people. So knowing where I want to go, I told you with the EB5, and that's where I'm going next. My question for you, Mikey, is, it seems like where you're going, you're close to maybe going to Wall Street next. So do you have that in the forefront or in the back of your mind? Because for me, that's already, before I've even started, I'm already thinking about, like, I want to go to Wall Street. And as you know, that's the best way to exit, is to do the ultimate refinance, is to go to Wall Street, get all your investors whole. Is that on the radar for you at all, Mikey?
Kind of. I'm getting there. Maybe I'm getting there through the side door. Maybe is a better way to say that.
That's cool.
Look, when you brought up the immigration investing, and then we all started talking about how many investors I have, or kind of what the best path is. I think no matter what business you start, you need to figure out what your vision and your purpose is.
Right.
And once you know that, then you could find the best path to get there.
Right.
For me, when I started this firm, I did not start this firm to make the wealthy wealthier. It's not why I started it. I started this firm to make people like myself that were on the path of trying to become financially free. I wanted to create something where we could put our money together and invest in bigger assets that we couldn't do alone, so that we could collectively get there as a community. It's why I named my company Commune. And so because that was my mission, I wanted to help as many people as possible achieve financial freedom. And, using real estate, that's what we could offer you. And so that's why I've started moving towards having a lot of investors. I'm working on something right now. I can't go into detail with it because we're about to submit it, but it's basically going to be an offering where way more people get to participate with us. My goal is, if we're at 600 now, we have the reality to be at 5,000 this time next year, like a whole different ball game. And so that's just more a function of why I created the company. If I created it just to grow my real estate portfolio, I would not do it this way. I would not do it with this many investors. I would go bring on a handful of my relationships that are single family offices, or, my buddies that worth 500 million bucks or more. I would just invest with them. And truthfully, my job would be much easier. There'd be less headaches on my end, but it just doesn't align with why I started the company. It doesn't match the purpose of it.
Yeah. And you can't do something that you don't have the purpose of. It's such a part of who you are, and people can see right through it. And you seem to be super genuine. Yeah, so that's right. It shines through. Mikey, just a few more questions before you've given me so much of your time, and I really appreciate it. Couple things. Number one, like social media. How do you deal with that? And then when you say we, who are you referring to? Who else is helping you out? Who else is on this journey with you, helping all these other investors achieve success?
Okay, so when I say we, I mean the total team. I have 3 other partners, including myself. We have about 16 employees total. So we've got a full team here that's making sure everything is running smoothly, from social media all the way to, asset management, investor relations, everything. And so that's kind of what I'm referring to as we, the team at Commune.
Got it.
I try actually not to chase trends. I try not to really get lost in what others are doing.
Yeah.
What's always worked best for me is when I go, this is what I want to accomplish. And what's it going to take for us to get there? And once we build out our plan, what works for me is when I put my head down and we all stay disciplined doing what we're doing. The second we start looking out the sides and seeing what others are doing, that kind of creates the opportunity for us to get pushed off our path.
Right.
And so I try not to actually care what others are doing. Like, more people coming into social media, great. More people want to create private equity real estate firms, great. Jump in. But what I know about our company, you're not going to be able to copy our company, because our company is created as an extension of myself and my partners, and you can't duplicate us, right? You might be able to duplicate the asset, but you can't recreate us. So I'm all good if you want to jump in. I just don't want to be distracted by what you're doing. And that is on me. That's my discipline.
That is really good advice. I mean, if you're listening to that right now, there's a lot of words of wisdom in that. And I think that, like, even for myself, just listening to that message that you just delivered again, I think naturally myself, I compare myself to others. I'm competitive, right? I'm like, I want to beat this guy, I want to beat that guy. But I think that the most important thing that you just said there is, if you're just focused on what your goals are, you're going to get there no matter what. No matter if you're comparing yourself to anybody, you're going to get there, right?
Right.
So.
And you know what? What I will say, I think it's important. I think it's okay for you to have somebody that you're chasing. Right. I think that's okay. Just make sure they're doing it way bigger than you, right? And just use them as your bar, right? Don't copy what they're doing, but, like, in this scenario, you want to use Grant Cardone as the example, right? Grant Cardone has, I don't know what, 4 million followers. I'm almost at 1 million. So he's got more followers than me, right? You look at assets. I'm at 315 million. I think Grant's at like a couple billion, right? So at least for me, I could look at Grant and go, okay, our goal, he's at 4 million followers. We're going to get to 6. He's at 2 billion. Our goal is going to be 3. Like, I'm okay creating competition as long as it's creating me to put more output to get there. What I don't want to do,
don't sleep on Mikey Taylor is all I can say.
You know what I'm saying? What I don't want to do, I don't want to look at the person next to me. I'm not looking at you. I don't want to look at the people below me. I'm only chasing somebody ahead. So I think that's okay to create competition yourself, almost the way MJ or Kobe would.
I think that's such a critical piece of information that people don't talk about. Is like, and I'm going to just say it. Like, I look at people below me and I look at people next to me, and I shouldn't at all, because you should only look at the people in front of you, because the other ones are going to take you backwards. I totally agree with that. And it's funny you just mentioned that. It's like, I was watching one of that trending song the other day, Forever Young, is on, on all these basketball things. And I was watching, and it was a Kobe deal. And I got so excited because Michael Jordan hugged Kobe because of that much respect that they had for each other, knowing that they both worked their asses off. And I think that's kind of what you're saying, is that, like, the respect comes from people who got there, and the respect isn't shared by people who aren't there yet. Like, because, like, if you're chasing Grant Cardone, he doesn't know you're chasing him. He doesn't care if you're chasing him, because he's not looking down. He's not looking to the left. He's looking maybe to Carl Icahn or Jeff Bezos, whoever his goal is. And Mikey Taylor's not looking around. He's looking at Grant trying to get there. And then once he gets to Grant, he's looking at the next guy to try to get him. Yep. So that's awesome, man. I appreciate that. I think you're a real dude. I love talking to real people. Final question. Final question. Why did you run for city council, and what did you hope to accomplish? And do you see that continuing to grow? Do you see yourself going for the next phase and the next phase, or is it just, hey, I'm staying here in my little safe area, or I'm going to knock out Gavin Newsom next, right?
It's a good question. I don't know. Let's start with the why I did this.
Yes.
So for me, this is where I grew up, right? This is where my parents raised me. My parents still live here. They now have a ton of grandbabies here. Like, we're experiencing what is magical about a small community, right?
Yeah.
And so, for my wife and I, we were talking about like where the best place to raise our kids are and is this it? And, that led to a little bit bigger of a conversation, which was if we were going to raise our kids here, how do we get involved to make sure this place not only remains special, but actually becomes better so that maybe our kids get to experience what we're experiencing. Maybe my grandkids will be here and we get to go like full circle again.
Yeah.
And so that's kind of why I got involved, to try to add a skill set that I don't think you often see in council members. I mean, I'll tell you right now, I never thought I'd run for city council. I never had a desire to, so now that I'm doing, I'm like, okay, you know what? I know that I'm unique. I know that I'm able to offer something that we traditionally haven't seen. Yeah. Hopefully that can make an impact. Yeah. Am I? I hope so. The challenge is a lot of the decisions we make today, we don't feel for multiple years out, but I believe I am adding value here. Do I do something after this? I don't know. I'm still wrestling with it. I've never enjoyed politicians. I've never been driven towards politics or at least the political figures that play the political game. Yeah. I've just never felt like they were real people. And so I've never wanted to, but I'll tell you what I'm internally wrestling with. Yeah. Politics does not incentivize good, skilled people to get involved. It's not where the incentive is. No. And so what I'm wrestling with is if I don't do that because of that reason, will we just always be at war with one another because the people leading the system shouldn't be? They're just not qualified to be. So I don't know. I guess all that to say, if I get frustrated enough, maybe. Do I have the desire to? I don't. Not at all.
Yeah, it's such a good point that you bring up there as well. Is like, if you look at it, having given money to plenty of politicians, most of these guys never had a freaking business. They never had a job. They never wrote a check. They don't know what that looks like, but they're going to pass all the rules that everybody else has to go by, guide by. And as you know, California has come up with the most propositions for the biggest bunch of nonsense ever. Like, they just came out with something that you basically can't flip a home. And you see this stuff over and over and over again. And you're like, dude, what the hell are you guys even thinking? Right? And it's just like, they're not thinking. They're thinking like, how do I please this guy who's giving me this money? How do I then go please that person who's giving me that much money? And I don't care about my people. I'll just keep telling them what they want to hear. Yeah. So it's really nice to see someone who actually has knowledge, a skill set, cares about their community, doing it, because we know most people are there for the power, not for actually the solution. So
yeah, unfortunately, I think you're correct.
Yeah. Unfortunately, I think I'm correct too. So, man, I really appreciate, Mike, you coming on and sharing your story. How do people invest with you? How do they follow your journey? How do they learn more about what you got going on?
All right. So if you want to follow along with at least the content I'm putting out, you can find me on any platforms, just Mikey Taylor. Instagram is the largest, then TikTok, and then everything follows from there. The company, or my company, is called Commune Capital. That's our handle on all the platforms as well. If you're on Instagram and you want to get information on what we do and you want to potentially see if you'd be a good fit to invest with us, just DM me the word invest and our software will pop up. You can put your information in and someone from our team will get you information. If you're not coming through Instagram, our website is communecapital.com, and there will be a page where you can get in contact with us to see what we're doing.
Awesome. We'll make sure that we linked to that. So if anybody's interested, just check out the link. Check out Mikey Taylor. This guy's got lots of knowledge. Skateboarder, turned private equity, turned councilman, future governor. We don't know. Maybe not. Listen, hey, you only live once. I think you understand that better than anybody. I understand that as well. Like, it's the impact that you can make today, not what you might plan on doing tomorrow. So I can see that you're getting a lot of shit done. Love to meet you in person someday. I really appreciate you coming on here. And guys, make sure you follow Mikey. Make sure you get involved, do something different, be a leader, not a follower, and look up, not down. What's up, everybody? My name is Troy Kearns, and I love the fact that you're listening to this video right now because I've got a great thing to share with you. I've got the best podcast that you're ever going to listen to. You've definitely got to check it out and give me your feedback. All you got to do is comment the word podcast, and I'll link you to it right now. So comment the word podcast right down below, and I'm going to link you to it. Check out one of our episodes. We're up to 150 episodes, all with entrepreneurs, businessmen, businesswomen, digital marketers, and politicians. People that you can learn from, people that I am learning from. Why do you think I'm having these amazing guests on myself? I'm trying to learn from them. So you're definitely going to learn something from all of these people. Hope to see you there soon. Peace.